Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 43,465, down 2.81%. Ethereum trading 29.29, down 6.41%. If you're new to the channel, I'd just like to let you know that everything I do for you is free. 7 days a week, I share my knowledge as a full-time technical trader with over 20 years of experience to assist you to be more of a financial blessing to yourself and those you love. Let's have a look at Uni. These are the Ethereum tokens. Uni is down 6.8%. We notice the stable coins USDC DAI turning green. That means there's an outflow from the crypto market into stability. We can also see that with USDT and BUSD. They're currently green. Just like to also let you know that I've hidden knowledge gems throughout this video. Unless you watch to the end, you'll miss them. See how many you can find. Over many decades in trading, I've developed literally thousands of rules that help minimize my losses and increase profits as well. I'd love to share those with you. Rule 159, signal, not noise. Now you say, Ken, what do you mean? What's signal? What's noise? The concept, signal is real, noise is fake. There's a lot of media attention on the Infrastructure Investment and Jobs Act, specifically Section 80603, which is the definition of brokers of digital assets. Particularly, we're worried and concerned as a community about Section 6045C1 of the Internal Revenue Code. That particular section of the Internal Revenue Code defines brokers. Brokers, under the common understanding of the term broker, are people who take money to handle funds and exchanges for other people. The current Infrastructure Investment and Jobs Act on page 2434, just buried right at the back, includes a section which is supposed to change the particular understanding of the Internal Revenue Code to bring certain activities under the general definition of a broker. There's a couple of people you can follow on Twitter. For example, Senator Rob Portman is trying to exempt from that definition of broker miners, stakers, validators, node operators, and software and hardware developers, especially those creating digital wallets. Ted Cruz from Twitter tweeted this: "There's a partisan disagreement on spending, so the Democrats objected to all further amendments." That basically means that the original provisions would remain intact. What that means is that this particular subsection D would remain in force or enforceable, which is a problem for the crypto industry. But this is very, very early days. We really need to determine what the true signal is here. From the Wall Street Journal, an article just came out. Senate moves closer to passing infrastructure bill. It's basically saying that this bipartisan infrastructure bill worth $1 trillion has cleared the final procedural stages in the Senate. It needs to go now to the House. But Nancy Pelosi says she's not going to even look at it until the Senate also passes the $3.5 trillion anti-poverty and climate bill. From the Wall Street Journal, there's another article. Infrastructure's bill's boost to economy is likely to be limited. This particular thing, this article says that $550 billion in spending is not a lot when it comes to the 6 trillion or 6,000 billion that's just been spent. The other thing in here, which a lot of people are actually missing, I think I mentioned this a couple of episodes ago, the infrastructure spending will take place over the next up to 10 years, starting from 2022. You can see this process is trying to determine tongue twister, trying to determine the signal rather than the noise. There are a lot of people out there that get absolutely justifiably upset about certain things. What I do for you is I try to take all of that emotion out and just figure out what the signal is. Okay, we've got a $550 billion bill, 1 trillion in total, that's going to be implemented in 2022. That is an implementation over 10 years. A lot of people have talked about the death of the crypto industry. We really need to look more into it. I don't see it, but that doesn't mean that there's not substance in there. I just need to dig more and help you to find the way forward. Maybe a little bit of history to help as well. I was pretty much there in 1993. I owned, ran and operated an internet service provider. Just to explain how early that was, back in 1993, the internet was just coming online, literally. There were a lot of government acts that were passed and discussed, and lobbying that occurred literally throughout the world. The governments were utterly clueless, totally clueless. They wanted to do all sorts of things that many of us thought would kill the internet back then. We know that the internet flourished. I believe crypto will flourish too. It doesn't matter what governments actually do in the long run, they're overturned by competitive actions. Just to talk a little bit more about Signal, back in 1993 and indeed 1992, governments around the world were completely against the internet. The internet was seen as a threat and something not to get behind. We can see the internet has become part of everyday life. I just want to share this with you because the long-term signal is, as far as crypto goes, is unchanged. It will change the world. It will change the world because it's actually not a cryptocurrency. It's not a currency. It is the next evolution in the internet. It is the upgrade that makes the internet truly capable of transferring money in a way that we've not seen before. It may just help to know that over the past 6 months, the number of global crypto users actually doubled from 106 million to 221 million. Literally 19 million people on average per month are becoming crypto users. That is a tidal wave of adoption. The Industrial Revolution was catalyzed by the creation of this thing called the spinning jenny. Up until that stage, people basically did their craft by hand. They weaved. The spinning jenny changed everything. It created the turmoil such as the world never saw. You may have heard of the term Luddite. The Luddites actually destroyed those spinning jennies, the textile machinery. It was a bloody war that they waged to stop the Industrial Revolution from occurring. I think a really interesting gem is this. They called themselves Luddites after Ned Ludd. He was a young apprentice who was rumored to have wrecked textile apparatus in 1779. Just like what we're seeing with crypto at the moment, the Industrial Revolution was not concentrated in one particular country. It was global. You can see all these machines. They actually replaced craftsmen. Craftsmen were specialists. They were experts, artisans. They were people who devoted their life. They were replaced by a machine. That is fair that the Luddites came to crush those machines, but nothing can stand in the way of technological progress. Each trend episode I show you this technological adoption curve that compares the internet to the crypto users. What I'm really suggesting is there is a whole history that underpins these lines, how they grow. Many people thought the adoption of the internet was a pretty stress-free thing. I can tell you from on the ground, it was not stress-free. It's exactly what we're seeing in crypto. This is nothing new. Keep your eye on that trend line. What did the trend line tell you? It said, I don't care, government, about your regulations. I'm not paying any attention. Oh, somebody wants to crush this industry. Not going to happen. People are fighting against it. Doesn't matter. Grew and grew and grew. Crypto will do the same. Crypto is a completely disruptive invention. It challenges a lot of mainstream businesses and established infrastructures. Maya Angelou said something really beautiful. Every storm runs out of rain. When you look at that particular growth curve of the internet and crypto adoption, this one, please keep in mind that there were thunderstorms, storms, typhoons, tidal waves, natural disasters going on in terms of government policy, pushback. You can't imagine the things that they were trying to do back then to kill the internet. The internet said, yeah, I'm still going to be here. I don't care what you're doing. Crypto will do exactly the same. I believe short term we could get a bit of fluctuation in Bitcoin's price, but we're at the right stage in the cycle at this particular point of time. Right at the end, tail end of episode 175, I put a little link in to say if you would like to buy me a coffee, that would be very nice, because so many people inside our beautiful community have reached out over weeks and weeks and weeks and weeks and said, Ken, I just want to do something for you. And I said, if you would like to do something, you can just go to buymeacoffee.com and look for Crypto Trading KS and buy me one. I wasn't really expecting anyone to buy me a coffee. I just put it there. Oh my goodness, I got so many beautiful people reaching out, sharing their love. I was utterly blown away. I just want to let you know that I am so appreciative of that. It really touched my heart. Thank you so much. Let's see how Bitcoin and crypto is going. Rule 174, the T-cube method, trend, timing, and trigger. Let's look at the trend. We're going to use the KS process to uncover the true trend. The first thing we do is look at relative investment attractiveness. People can put their money anywhere. Why go into crypto? Why not the stocks or precious metals? How are they performing? Over the past 12 months, the S&P 500, the proxy for stocks, went up 32%. Poor old gold's not doing too well. It's down 15%. Bitcoin is up 270%. I think it's also important to understand when things have any particular investing vehicle has a very high percentage, that means it also has very high variability. It can move around substantially. Just bear that in mind. That's why I say crypto is volatile. I just want to prepare you for the swings up and down. I've put together an early warning system on so many aspects of the market. Let's have a look at Bitcoin's trend. One little knowledge gem that I would like to help you out with. Quite a few members of the community said, Ken, have you looked at the hash ribbon? It's a buy signal. It's awesome. How about it? There's no doubt that the hash signal is pretty cool. Here, we look at the KS model, which is a crypto technical trading model based on institutional price psychology. The beautiful thing about this particular model is that we can add pretty much anything into it. We can compare it to Ethereum, we can compare it to the stock market, to gold, to silver. We can pop the hash ribbon on it. It's exactly what I've done here. You can notice when this hash ribbon, this is the hash ribbon, when it gets laid out on this chart, the buy signals are quite effective. That is true. Now, what are we looking at currently? We're looking at green. Green is good. It's on its way to blue. Not quite there yet, but it's getting there. You notice these blue lines, these blue dots, have been very, very accurate in detecting really good positive movements in Bitcoin. I would suggest that you cannot, and this is a gem for you, a very, very important gem. I'll give you a couple. First thing, never take anyone's advice on anything unless you've done the research. What I mean, primarily. It's not a question about trust. It's a question about verification. If somebody says to you, wow, this indicator is flashing green, you should buy, please don't do that. You need to have way more than one indicator. If you go off one indicator, it could absolutely lead you astray. Not because it's not correct, because the timing may be incorrect. And also, you will find that different indicators will tend to fight with each other. Some will say, yes, go for it, and others will say, no, back away. You really need to form a very big picture. You're really looking for a confluence, a lining up of different things to say yes or no. The other thing is indicators in general. This is another gem for you. Indicators are not holy grails. They're just indicators. And indicators tend to be lagging. That means they look at past data to try and figure out what's happening. And that's fair. Those lags can always result in timing errors. It's past data. Sometimes the past reflects, absolutely, but sometimes it doesn't. For example, in this particular section of the KS model, when we look at Bitcoin's price, what actually happened? We had a black swan event. Believe it or not, that's called what I call the liquidity blow-off. We also had a black swan about the China miner exodus, where the hash rate dropped really considerably, which may be impacting the hash ribbon itself and the signals it's throwing out. The most important thing is price has now normalized. Price literally has blown off that area. It's come back to a reasonable state so that we can resume properly. This is why, as a community, we look through so many things. We're seeking confluence of a wide range of indicators, on-chain analysis, trend lines, all sorts of things, so that you can have the best possible position from which to make a decision. If we have a look at the hash ribbon now, we can see it's really, really red. It may be a very good idea for us just to zoom in on that area. Here we go, just zoomed in. What we're seeing is there is a signal being actually thrown between the 30-day and the 60-day moving average here. When you get these kind of averages crossing each other, some people say it's a really, really good signal. If you look back, you can see a wide number of crosses up and down in this particular horizontal area. Sometimes they're good, other times they're not so good. From a personal perspective, being in the markets for so long, trading across so many different markets, I don't ascribe a lot of relevance to these moving averages. When we look at net unrealized profit and loss, NUPL, we see that we've not reached any euphoria level or capitulation level in the current cycle. The MVRV Z-score is also way below this red area. I always say that you don't have to be an engineer. You don't have to have built the car to drive a car. So too it goes with a lot of graphs that you can look at. If we look at relative unrealized profit, we can see we're basically only one wave through. We've got a couple more to go. We don't see any spiking in the number of transfers to exchanges across all exchanges. We're quite low at the moment. That just gives us confidence that we're not hitting a peak. When price increases dramatically over the 365-day average of miner revenue, we get a reading in this red area. We're quite a way below it currently. When we look at realized cap hodl waves, we understand that there are basically 3 prongs per cycle. We've gone through the first, we're waiting on the second and third. When we take a long view model approach, we see we're in phase 1. Phase 1 is the largest increase relative to the other phases. We're just getting going. If we look into the current price action, we're in the sunshine phase of the bull market. We're coming up to this logarithmic resistance line. It's on log here. We can see the price has faltered around that log line. What you're looking at with the green is the 2016 halving cycle for the bull market, and the blue is the 2012 halving cycle. Notice I don't move these lines around to fit the current price action. I know some models do, and that can give a really interesting insight to where price might go. Coming from a very hardcore mathematical background and lecturing in first and second year stats, I just can't do it. I can't move the data to make it fit what I want or what I don't want. I just have to leave the data as it is. So this means we're looking pretty good in terms of Bitcoin's upward price momentum. We can always buy lower, and that's what we seek to do as a community. Let's have a look into potential early warning systems for health black swans. A lot of media outlets are covering the Delta virus. It's important for our sake to see these numbers go down. Now, what are these numbers? That's the cases in the last 7 days compared to the cases in the preceding 7 days, like 14 days ago. What we're seeing, weekly case change plus 2%. That's the lowest we've seen for a while. We also see quite a few negatives coming in through here. That is a really good signal, but please be aware over the weekend, we tend to get this weekend effect with numbers. This dashboard from Johns Hopkins University just helps us to see that we've gone through the first wave, second wave, we're currently in the third wave. Okay, let's go through the global indexes and see if anything is weakening. We're always seeking to just get ahead of anything else that the market might throw at us. If you find the market's retracing on strength, that is a pretty good indication that we should engage in risk-off behavior. Let's just check across the markets and see what's happening. I'm just zooming out to give you the early warning system. When the VIX, which is the fear gauge of the S&P 500, when it spikes over resistance, it takes a little bit of time to get there, but when it double rallies, we can get a very sharp increase in the VIX. That is a bit of a problem. That's an early warning sign. What do we see right now? We see the VIX is under these particular lines. It's all looking pretty good from the VIX's perspective. If we zoom out and have a look at the NASDAQ 100, we can see just before the crash, when we had the US liquidity crisis and the world closing down because of the virus, we had this violation in long-term support. That long-term support line is here. Getting a retracement back to the long-term support line is no problem. That's just normal price action, as you can see. We expect that price is always going up and down. A little gem for you is the understanding price is always moving in a wave, up and down, up and down. When it comes down, it may be a little bit painful to see paper profits disappear and losses be created, but so long as the trend holds, everything is fine. Another little gem for you here is if we, maybe I just zoom in there and show you more effectively. We saw here an incredibly sharp sell-off. Look at how sharp that was. That's not a normal sell-off. Normal sell-offs are kind of like this. This is a weakening sell-off. This is okay, but this is something different. We're looking for these something different. We don't see it at the moment. Let's compare the S&P 500. When we look back to the COVID US liquidity crisis, viral crisis, we saw the market sell off quite dramatically. Notice this, the break in that structural line. Look at this line going up and up and up, showing weakness around here. If we just zoom into that, you can see the weakness at play. It hugged that particular one support, then turned resistance, then became support again, and then sold off. These big sell-offs are what we're looking at. We're looking for that. So how does it compare to the current price action? Pretty favorably, actually. The S&P is not showing that weakness. It's maintaining its upward support. It has actually got above that particular once resistance, now turning into support. if the market indices actually sell off, we need to watch how they sell off. Let's have a look at the Russell 2000. The Russell 2000, if we look back before the crisis hit the market, the Russell 2000 then went down around, well, nearly 45%. We can see this really good upward trend line, created some negative air in there, sold off hard, kept on going. What do we see here? There is definite weakness in the Russell. There was a lot of liquidity that came into the system through all the stimulus, and then that's just being normalized out. What is really important is to understand what happens here. If we start to get negative air, like we've been discussing inside our community, if we start to get that, that is a cause for concern. It's also important to note that the Russell is about twice as sensitive as the S&P and the Nasdaq. That is really important. I spoke about negative air. Let's go back to when the Bitcoin sell-off just first occurred. What we saw, if we drew a trend line from the peak to the peak of these two mountains, if you like, these all-time highs, price didn't make it up to that resistance. That showed weakness in the upward price momentum of Bitcoin. I always say, got a little quote, beware of negative air, and you really need to be aware of it. Be aware and beware. Okay, if we look at this support line, you can see it got sliced through like a knife, tried to get back up to that support, now resistance, and went down. More negative air. This actually foretold the whole crypto market that we were in for problems. However, the YouTubers were all, go all in, it'll never be cheaper, the melt your face off rally is coming next. What's important to understand is YouTubers typically get it wrong when they're saying to you, you should go all in. For one, this is a gem. Please do not go all in. You need to be really careful with your money. Do you remember back here around the 12th of July, all the YouTubers were saying, oh, Bitcoin is going to 10,000, 20,000, it's going to zero, all the models are broken, the bull market is over. Well, Bitcoin kind of had another thing to say about that, didn't it? It's really important to just keep the context. That's why we always search through as many triangulating features as we can to determine the true trend. If we look at the Dow Jones, we can see going back that there was a very good trend line in play here. It's quite a tight trend line. We're always looking for that extreme sell-off. That is what we're looking for. Do we have that now? No, we don't. How is the trend line going? We have one being maintained. We have a degree of negative air here. That's not so good, but we also have time to see if that actually repairs, because the Dow is actually getting up to an all-time new high. All-time new highs generally require a sell-off, consolidation, and momentum building up to the upside to get through. These things are very normal inside markets. So far, we're not seeing any of these kind of weaknesses, but we need to keep our eye on this. The Dow is always ahead of, for example, the S&P and the Nasdaq in terms of showing weakness. As I go through the early warning system, please remember, worry never robs tomorrow of its sorrow. It only saps today of its joy. You don't want to prepare for downturns in the market until they actually occur. Just sleep soundly. Just keep on looking at this timing and we'll get there. If there's anything to be concerned about, I will absolutely let you know. We're not seeing, for example, in Canada's index, there was a lot of weakness. You see that big sell-off. I'm trying to give you the gems of how to look at particular markets with an understanding of what price action is doing. We can see the TSX, Canada's market, cut through that support line and it really went down from there. If we have a look currently, what is happening with Canada's market, it's looking really good. It's overcome this resistance, turned it into support. There was definitely a little bit of weakness here, but it's repaired it. Now that you've got the key gems, let's just look at the various global indexes. China's Shanghai Composite Index showed a lot of weakness on that particular once support, then turned to resistance. We need to keep our eye on it. It could be very useful for you to know that the S&P and the Nasdaq came down, reached their peaks on the 20th of February. China's index reached its peak on the 14th of January. It was quite far ahead of the US market in reporting weakness. If we have a look at the China Technology Index, it sold off quite hard. We've got negative air above that. That's in relationship to the Chinese government's clampdown on a variety of different sectors, of course the technology sector in particular. India's Sensex market is looking really good. Look at that. It's popped over that once resistance, turned it into support. This is just a natural wave in price action. South Korea's Kospi 200 is seeking to get above this resistance and rally off. We can see that it's been consolidating for quite a while, but it's doing so in an upward direction. This is quite healthy price action. Japan's Nikkei 225 is showing weakness, but this basically does not mean that the market is collapsing. It's really important to see if price can get above this resistance line. Mexico's market is showing strength. Brazil's market is showing a little bit of weakness here, but it's being supported in price too. The UK's FTSE 100 is doing well. It's broken out of that resistance. It's making its way up. Germany's DAX 30 continues its march up towards that resistance, looking quite healthy. Well done, Italy. It's romping towards all-time new highs on strength. France's CAC 40 index is also doing really, really well. Australia's index is moving up on strength too. Spain's index, the IBEX 35, is recovering from that sell-off. The Swiss market has turned that once resistance into support. Singapore's index continues to gain strength. Let's quickly go through the T-bonds. We can see that before the crash, the T-bonds rallied across resistance and absolutely rocketed up. They did have a withdrawal too, but we would expect this kind of exponential price action if there is a problem in the market. We can see that the T-bond futures are getting above this resistance, but not on strength, not yet at least. The TLT is exhibiting, of course, the same behavior, but we can see that the TLT has been under weakness just recently. In a crisis, the TNX, the 10-year Treasury note yield, sells off dramatically. What are we seeing? It's increasing back up to that resistance line. That's a good sign. The TYX, the 30-year Treasury bond yield, also collapses when there's an economic problem. What are we seeing here? It's improving. The high-yield corporate bond, HYG, sold off significantly when there was a problem inside the market. We're seeing a bit of weakness, but no sell-off like this. Copper is particularly economically sensitive. When it sells off very hard, it does so before the other market indicators typically do. We're looking for something like this. We're not realistically seeing it just yet. There is some weakness, but we're not seeing weakness like this. When the world shut down, the airlines just got hammered, absolutely. We're not seeing anything like that kind of movement. We are seeing definite weakness in the airline index, but you note in the past, the airline index was maintaining a fairly horizontal range. Here we have improvement. We'll just keep our eye on this. We're not seeing any dramatic sell-off. There are quite a few ways that we can measure transportation. I'll go through a few of those now with you. We can see when the last sell-off occurred, we had negative air and a substantial sell-off. What are we looking at right now? No negative air, no substantial sell-off. TRAN, T-R-A-N, the NASDAQ Transportation Index, we can see weakness. We need to keep our eye on this, but we're not seeing weakness like this big sell-off that indicates there is a very big problem in the market. So far, so good. When we look at DTX, the Dow Jones Transportation Average, we can see that there is definite weakness in the DTX. However, that weakness is not like the massive sell-off that was accompanying the past sell-off. When we look at the DMT, that's the Dow Jones Transportation Average, when we had the sell-off before, there was a big reduction in the DMT then. What are we seeing? The current degree of weakness in the market is actually technically repairing itself just at the moment. That's probably easier if I zoom in. If I just remove that line, you can see that the market is actually in terms of structural repair. For example, that price is now acting as support. It's not weakening. It's actually consolidating on this side. That's a good thing. Pre-crisis last time, before the 18th of Feb 2020, we saw the utility sector just rallying up crazily. Then problems start to hit and price came down very dramatically. Actually, it dropped like a brick. What can we see now? Utilities have overcome this resistance. They're going up on support, but they're not breaking away in any crazy manner. We need to keep our eye on this, but no cause for alarm at the moment. In the past crisis, before the past crisis, gold was absolutely rallying up and up and up. Look at what gold is doing now. It's doing the exact opposite. This is an indicator which would make us feel more confident and comfortable that a big sell-off is not on the immediate horizon. Going back in history, silver, when silver was making its play to an all-time high and then got into problems, it came down very sharply. But the idea was that it was rallying up before it showed price weakness. It's definitely showing price weakness at the moment. But we would anticipate if there were problems, potentially silver would come up first like gold as a potential safety haven. The reason I said that, gold and silver tend to move together. If gold is viewed as a safe haven asset, which it is absolutely viewed as, silver and gold tend to move in the same direction. Tend to. Oil is far more important than the transportation index. Oil tends to throw out signals way before transportation does. You see back here on the 6th of January 2020, oil started to sell down quite significantly. We're seeing some weakness in oil, but not significantly to the point that we would be worried about it. If it continues to sell down significantly, that would be an early warning sign. We'll just keep our eye on this. This is Brent oil. We can see the same thing with light crude oil. It's very much a leading indicator, much more sensitive than transportation. We can see this weakness and this drop. We see a definite weakness here. We're waiting to see a drop. We don't see it right now. Just one thing to keep you aware of, it's an important gem. Even if we do see an absolute weakness in oil, the last time this occurred, the markets actually took about 6 weeks to sell down. That means that light crude was about 6 weeks ahead of the S&P and the NASDAQ actually selling off. That's very important to understand. This is why we look at it. I'd like to give you a real gem here. This is fantastic to know. Before the meltdown in the markets, which occurred on the 20th of Feb, you can see that the DXY started to really rally up. And when the market started to melt down, the dollar also melted down. And then on the about 9th of March, quite a few weeks before the other indices repaired, it started to rally up. And around the 23rd of March, the DXY reached its peak when the other indices reached their bottom. This is a really good knowledge gem. It's fantastic to know how different things interrelate with each other. What are we seeing here? The DXY, it's currently coming up. It's over resistance, but literally like just over resistance. Let's keep our eye on the DXY. Let's have a look into Bitcoin. We can see on a normal non-log chart that the arithmetic structural resistance line has been passed. Now we'll change it to a log chart by just pressing the log. We can see that this logarithmic structural resistance line, drawn exactly the same way from that peak to that peak going forward, was rejected in terms of price. I mentioned this yesterday because the potential for that rejection to occur was quite on the cards. Let's zoom out as we've done for the other indices. We can see Bitcoin sold off early. Now that actually came down around 64% in value. I'll just zoom in there to give you a closer look. Just give you a little gem here. The S&P 500 and the Nasdaq sold off on the 20th of February. They only hit their bottom on the 23rd of March. What happened to Bitcoin? It sold off actually about a week earlier, so 7 days earlier, and it repaired. It hit its bottom 10 days earlier. This is a really, really interesting thing. The other thing to notice is a lot of the loss actually occurred on the day before the bottom was hit. This is the very volatile nature of Bitcoin. This is a really powerful rule to live by. It's one that I live by. Deal with problems when they occur, not before. It's a really good way to deal with things. You can lose a lot of sleep thinking, oh my goodness, some problem is going to occur. That can give you very sleepless nights. We don't want sleepless nights as a community. I want you to have a lot of confidence in what you're doing and sleep well at night. If there are any problems, we will call them out. Absolutely. I just walk the middle path. I say, when there's a problem, there is a problem. I don't keep it from you. I make sure that you know. You will know. I'll let you know. And apologies for this particular episode coming out so late. I actually did about 6 hours worth of research to try and figure out the signal. I was getting so much noise. These signals always become clear over time, but sometimes they're hard to find the facts when they're just breaking. I'll keep you informed. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. And thanks very much to our moderators for keeping our community safe. I do these videos to assist you to be more of a financial blessing to yourself and those you love. If you would like twice daily updates, 7 days a week on price movements in the crypto market, please subscribe to YouTube. And it would be great if you hit the notification bell as well. That way you won't miss anything. And you can also follow me on Twitter. I always love getting direct messages, so if you would like to contact me there anytime, please feel free. Crypto is volatile. Always prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.